Hi friends, welcome to Adda 24/7. We are in the BFM most important questions and case study series. In fact, it is for all the subjects ABM, BFM, BRBL and ABFM. Various mentors are taking various this questions. Okay, various subjects. So let's start this, and importantly, kindly share this channel, like this channel, click on the bell icon. First do the bell icon concept. Okay, subscribe to the channel. So let's start. So this first we'll be starting from the case study. We'll be doing the case study today related to module B. From the following, calculate the value of the risk-weighted assets of a bank. What is given? Paid up capital is given as here. You have to calculate RWA. Be sure this case study will be there in the exam. Some form or the other. RWA calculation is a part of your BFM calculations. There can't be any paper where this calculation is not there. So paid up capital is 1000 CR. Tier 2 capital is given as 2000 CR. Debentures are given as 100 CR. See this, it's given everything over here. Debentures 100 CR. Risk weighted asset is given as 90% for this debentures. Okay. Now what do you mean by this? The risk is 90% of this. Mortgage 250 CR means 250 crores mortgage loans are given and the risk is 75%. Loan to government is 150 CR. Where is the risk over here? For this government loan, there is no risk. Okay. So how to solve this? You have to calculate the RWA among these four. I'll show you. Chalo. Let's move on. See this. Firstly, understand the capital is of, you have to calculate RWA, risk weighted asset. So you need to have the formula of CRAR. Formula CRAR is what? Capital upon RWA. Now kindly understand, capital is of three types. Tier 1, Tier 2 and Tier 3. Okay. Tier 1 is a free capital. It's called as going concern. T2 is a paid capital. It's called as a gone concern. T3 is the emergency capital. Okay. It's taken only in case of emergency due to market risk. Okay, this T3 is maximum 250 times 250% of T1. You can't take beyond that, and that is also for market risk. So let's move on with the topic. So capital. So what are the two capitals? Tier 1 and Tier 2. What is given? Look at this. Paid up capital is given as 1000 CR. T2 is given as 2000 CR. So paid up equals to T1, Tier 1. Okay. So my Tier 1 capital is 1000 CR. And Tier 2 is given as 2000, but I'll take only 1000. Why? Because the rule says that T2 cannot be greater than T1. Tier 2 can never be greater than T1. Okay, so I'll take 1000 only. So look at this. Total capital of mine is T1 plus T2, 1000 plus 1000, 2000. Clear? What is the formula for CRAR? Capital upon RWA. Okay, capital upon RWA. So capital I've got it, 1 plus 1, 2000. Now RWA. RWA is whatever are the risks for the loans that will be taking it. So whatever are the risks, let's look at the risk. Okay, what are the loans given? Debentures. Okay, so debentures are given as 100 CR. Risk weight is 90%. So what does it mean? Out of this 100 CR, 90% is the risk. So what is my risk weighted asset then? 100 into 90%. So 90 CR. Similarly, mortgage. 250 CR and risk weight is 75%. So 75% is the risk. So 250 into 75%, 187.5. Government loan, 0% risk because there is no risk to the government. Whenever you give the loan to the government, central government, the risk is 0%. State government, somewhere we take 20%. Okay. So 150 into 0%. So that is 0. So my RWA for this government loan is 0. Kindly note, this question is also asked separately, 1 mark. Okay. So what is my total risk weighted asset then? 90 plus 187. So 277. So what is my this CRAR then? Okay. You have to calculate what? Calculate the value of the risk weighted asset of the bank. So risk weighted asset is only asked. So your answer you have received 277.5. But this is what I have solved extra. The extra is this. You have to calculate CRAR then. This is not asked in the numerical over here. So CRAR equals to capital upon RWA. So 2000 upon 277.5. Okay. So into, it's always done into 100. So 7.2 into 100, it's huge. Okay. This is huge, means you are having a huge capital with respect to the loans. It is 720% if you calculate it. Okay. So the important part over here was calculating the RWA. Okay, risk weighted asset. So this is RWA, this is a capital, this is your CRAR. Got it? Such simple case study, it's not that simple. You must know the formula. If you know the formula, then everything is easy, isn't it? Now everyone subscribe to this Officers Adda 24/7 English channel. Everyone, okay? Because here you are getting the free YT series, free notes, free ebooks, okay, free question bank. Join the crash course batch. Just now it is started. All the numericals, objective questions, case studies are covered. You can join the Mahapacks as well. How to join it, I'll show you at the end. Okay, let's move on. Which of the following bank cannot issue the certificate of deposit? RRB, public sector bank, local area bank, and both A and C. Think over it. Which of the bank cannot issue the certificate of deposit? Let me see the answer from your side. Firstly, you tell me what is certificate of deposit. What do you mean by certificate of deposit? Yeah. Certificate of deposit basically is issued by the banks, and any company can issue it. It is an investment tool offered by the financial institutions in which the investor have to deposit their funds for a specified term to earn premium interest rates. Now what is happening? Many of the companies are shifting their FDs to CDs. Okay, many of them are shifting their FDs to CDs. Okay, so now there are minimum stipulations given by RBI. RBI has given various stipulations regarding the CDs. RBI says a CD issued should be in a dematerialized form compulsorily. It should be issued electronically, and it may be automatically renewed if the depositor fails to decide what to do with the matured amount during the grace period of 7 days. So these are the guidelines given by RBI. Minimum amount of deposit which RBI has kept is, that is generally kept at 5 lakhs. Okay, but latest, let's see minimum amount. So in the meantime, you tell me who can issue and who cannot issue. Okay, certificate of deposit. So the point is, who can issue? It is both. It is only public sector banks who can issue, and cannot issue, the answer is both A and C. Yeah, so now answer me. What is the minimum amount in CD? Minimum. Let me check. Minimum amount of investment in CD. What is the minimum amount? Who can tell me? In the comment section. Everyone type in the comment section. Minimum amount of investment in the certificate of deposit. This question, see here, CD, CP, both of them are having the same amount nowadays. They are having it for 5 lakhs. Okay. So amount has been brought to 5 lakhs. Minimum amount of investment. Okay. Got it? Move on. Next one. Okay. Now next one. Which of the following policy rates is used by RBI for absorbing liquidity from the economy? Absorbing liquidity. Okay. Repo rate, MSF, selective credit control, and moral suasion. Now absorbing liquidity means RBI wants to get money from the system. So which of the rates, which of the policy rates is used? Think over it, each one. Think about it, each one. Which of the rates are used by RBI? Yeah. There are more tougher questions coming up in this session today. Okay, so follow it completely. Yeah, it is. Which one is used? It is moral suasion. Remember, moral suasion is the tool used by RBI for absorbing liquidity from the economy. Okay. So repo rate is also one of the important tools. By repo rate, RBI control, increases the base rate or decreases the base rate. Okay. MSF is marginal standing facility. This is a facility used by the organizations or the banks, mainly used by the banks whenever everything dries up. Dries up means there is no chance of getting any money from any other bank or even RBI through their OMO. So in that case, MSF comes into picture. Okay, MSF rate is the highest rate. Then selective credit control, that is totally different. Selective credit control is related to the internal part of the bank, means whom to give the loan and whom not to give the loan. Moral suasion is done by RBI for absorbing the liquidity from the economy. Okay. Next one. What rate will be quoted to the customer in the given scenario? The inflow of USD 50,000 by the FI, foreign institution, for credit to your exporter's account, being advance payment for exports. Credit received in Nostro statement received from the New York correspondent. The market rate for USD is 75.25 and 228. So what will I use? Will I use 75.25 or 75.28? Buying rate, selling rate, what will I use? Or 75.25, 28, 23 and 28. In fact, I'll solve this query for you. See this. What is happening? The customer is, the rate is, what is happening over here? Credit to your exporter's account. So this is my exporter. Okay. And this is some buyer or some importer, anyone. Okay. Importer. Now this importer is giving money. See, these dollars are coming in. Dollars are coming in. Okay. So whenever dollars are coming in, you have to buy the dollars. So what do we do as a bank? We buy the dollars from this customer. See, this exporter will get the dollars, but he has to spend in rupees. This exporter can't spend in dollars. If he has to give it to some salary to somebody, this salary can't be given in dollars, right? So this salary will be given in what? Rupees. So he will sell the dollars to you, bank. Okay, so the exporter will sell the dollars to you and you will sell the rupees to that guy. Sell means give the rupees to that guy. So what are you doing over here? Dollars are coming to you, so you will be buying. So you have to use the buy rate. So what is the buy rate? Always remember, whenever you have two rates, 75.25 or 28. So whenever you have these rates, 25 is known as the buy. Okay, buy. And 28 is known as the sell. Okay, there are various names. This is also called as this bid. Okay, this is also called as offer, or some banks call it ask, bid ask. Okay, so it can be anything. You, for your CAIIB terms, remember simple logic. This is the buy rate. So you will be using the buy rate. Now there is, in this question, it's not given, but I'll ask you over here. Will you be using the bill buy rate? Or will you be using the TT buy rate? What will you use over here? Bill buy or TT buy? Think over it. I'll answer that also. Bill buying or TT buying? Tell me. Bill buying rate or here, answer for this you have got it. The answer is what? Buying rate of 75.25. Where is it? 75.25. B is the answer. Buying rate of 75.25. You have got the answer. Okay. But the question is different now. My next question is, will you be using the bill buying rate or TT buying rate? So now you understand, whenever you have to finance anybody, Whenever you are financing, at that time only you use the bill buying rate. Here are you financing? It is a simple transaction. Somebody has given the money, you have to just exchange that money. So it is called as a spot transaction or TT buying. So spot or TT. So here you will be using the TT buying rate. Okay. So TT buying rate of 75.25. That is the exact answer. Which of the following is a potential cost of adverse movement of the interest rates that the bank faces on its deposits, borrowing, lending and interest rate derivatives? So potential cost for the adverse movement of the interest rate means if the interest rate goes lower. Interest rate means what? Here we are talking of repo rates. So if the repo rate goes up or down, what is the cost to the bank? How will the bank be affected? Yeah. How will the bank be affected? Yes. Think over it. So the answer is, everyone, the answer is, what is the answer? See here, understand this: legal risk, operational risk, interest rate risk, country risk. Now adverse movement, adverse movement means adverse movement of the interest rates. So that will be led by what? Legal risk is totally different. Legal risk is a part of your operational risk. Legal risk is a part of your operational risk. Okay, so that is not a part. That is not the answer over here. This is due to the changes in the interest rate. So definitely you'll get the answer as interest rate risk. What do you mean by interest rate risk? If the interest rate risk means if the interest rate goes down, see, our logic is very clear. If the interest rate goes down, okay, then what happens because of this interest rate? What is the difference? See, our first thing what happens is the bond prices, okay, they go up. Very important. Interest rate down, bond prices up. The prices of the bond will jump like anything. Second point, interest rate down means what? The rate of interest for the loans will go down. So loans will go down means what? Bank will earn less in this case. There is also a negative effect on the economy as such. If the interest rate goes down, the loans rate goes down. So customers will take more loans. Companies will borrow more loans. So if companies will borrow more loans, then what will happen next? If companies borrow more loans, then they'll spend more. People will get more money in their hands. So that will lead to inflation. Okay, got it? So there are multiple effects of single policy decision. Got it? There are multiple effects. Okay, move on. Chalo, next one. What is the purpose of certificate of origin in international trade? What did I say? There are difficult questions coming up. Why is COO used? To determine the value of the goods in the international trade. To determine the invoice numbers of the goods in the international trade. To determine the origin of goods in the international trade. To determine the bill of lading number of the goods in the international trade. So what is the logic behind the COO? Now COO is always used to show, first let me get the answer from your side. Value of the goods. Value of the goods, from where do we get it? Value of the goods. This value of the goods. This I'll get it from two documents. Two things. In fact, not documents. One is invoice. From invoice I'll know at what rate is are the goods being sold, right? Second, to determine the invoice number. The second one I can get it from that this BL also. From BL or the customs document. Whenever I declare it at the customs, there also I come to know about the value. Okay. To determine the invoice number of the goods. So invoice number is not that means certificate of origin is not required for determining the invoice number. Okay, that you can directly see it on the invoice itself. To determine the origin of goods in the international trade, this is very important, and this is the answer. To determine the origin of goods in the international trade. Now, why is this required? Now look at this. Many countries, what do they do? For example, in our country only. Suppose if somebody brings the goods from China. Okay, goods are brought from China. Let's say China to Bharat, I'll say now. Bharat. Okay. Now China to Bharat, the goods are brought. Now what happens in this? Once the goods are brought, this person will do what? He will change the label. Change label. If he changes the label and makes it made in India, and then sells it to some other country, Europe or anyone, Europe. So now ethically, is this correct? Is this ethically correct that I am selling the goods which are manufactured from some other country and then I am changing the label made in India and then selling it? So ethically it is wrong. Many of the countries want where the goods are originated. Why? Because I'll tell you, there are various reasons for this. Some countries have their internal rivalry or animosity, enemies. For example, which one? Many of the countries have the rivalry or animosity with Iran. So many of the countries, if you see in international trade, they say that we don't want any goods from Iran. We don't want any goods from North Korea. Similarly, some countries don't want any goods from China because of the quality. So that's why the country of origin of the goods should be known. Okay, and that is the basic purpose of COO. Okay, certificate of origin. Got it? Shall we move on to the next one? Okay, chalo. What is the objective of ISBP 745? Now we are talking completely of module A, international trade. What is the objective of ISBP 745? To provide the guidance for issuance of LC, to encourage uniformity of practice worldwide, to reduce the number of credits rejected by the banks owing to the discrepancies, to provide a set of rules for bank-to-bank reimbursement. All A, B and C, means all of them. So what do you think should be the answer over here? First search on Google right now. What is ISBP 745? Or if you have studied, it's well and good. So search on Google first. What is the objective of what is ISBP 745? ISBP 745 is a supporting document to UCP. Remember this. ISBP 745 is a supporting document to UCP. Got it? Supporting. Okay. So if it is a supporting document, then what is the purpose of this? Provide guidance. Guidance will be provided by UCP. This is provided by UCP. Okay. Then C, to provide the set of rules. Again, it is provided by UCP 600. Now remember, you'll say, what is this UCP 600? See this. Those who have not started their studies up till now. UCP means what? Uniform Customs and Practices. Uniform. The full form is actually not UCP. You see, Uniform Customs and Practices. Now UCP for documentary credits. That the full form is actually UCP DC. Documentary credits. Okay, so that is the full form. The full form is actually UCPDC, but we don't write such a big word. That's why we write only UCP. And what is this 600? There are various versions of UCP. Means it has started from 100. Then earlier it was, means before 600 there was 500. Now next UCP coming up is UCP 700. But still the date is not on. So that's why we are still using UCP 600. Now there are 5 documents in international trade. Very important 5 documents. One is UCP. Second is ISBP. Third is URR. fourth is ISP, and fifth is EUCP. So these are the 5 documents which are used in the international trade. All these are related to various other domains. Okay. So ISBP is a supporting document to UCP. Supporting. URR is what? You are having this in your CAIIB portion also. Uniform rules and regulations. Right now the URR going on is 725. ISBP going on is 745. These are the versions. UCP going on is 600. Okay. ISP going on is 98. EUCP is 2.1. So these are the latest versions of these UCP, ISBP, URR, ISP and EUCP. So URR is for Uniform Rules and Regulations for reimbursements. These are used when we use a reimbursing bank in between. ISP is what? ISP is mainly for standby LCs. What is standby LC? Standby LC is similar to that of the guarantee. In Europe and America, banks can't issue guarantees. So that's why they issue standby LCs. So that's why this ISP 98 has come in picture. EUCP is for the online, all these 4 things means basically UCP. All this UCP is for LC business. Now LC means physical LC, but nowadays we are shifting to e-platform. So that's why we have EUCP. EUCP is basically a document for UCP 600, online trading, online movement of UCP. Okay, so that is the basic purpose of EUCP. So now the question remains, what is the objective of ISBP? The ISBP is to encourage the uniformity of practice worldwide to reduce the number of credits rejected by banks owing to the discrepancies. Now what do you mean by this? Now understand, it's very important from your CAIIB point of view also. UCP has total 39 articles, 39, but they are so difficult to understand and each person interprets them in his own language. Like our regular laws, all our laws, anyone can interpret them in their own language, but there should be some guidance. So bring the uniformity in this interpretation. To bring the uniformity in the interpretation, this ISBP has been brought in. ISBP provides a uniformity. Uniformity means what? Here, it will give you how the invoice should be issued. Any invoice in the international trade should be issued. How the BL should be issued. What all signs are required on the BL. Okay. What all are the other documents required? What is the bill of exchange? What all points should be there on the bill of exchange? That will be given under UCP, some part, and ISBP mainly. What are the various certificates required in international trade? Like there are various health certificates, phytosanitary certificates, those are required. Various lab certificates. So the idea about or the clarity about what should be the guidelines for issuing these certificates, that is given in ISBP. So that's why ISBP is actually a supporting document for UCP 600. So what is the purpose of ISBP then? The purpose of ISBP is basically to encourage uniformity so that each bank doesn't interpret it in its own language, each banker. Okay. So uniformity. Otherwise what happens? I'll think something about the UCP rules. Somebody else might be thinking something different. So in that case, the LCs, credit means LCs. The LCs will get more rejected by the banks. Suppose in the way in which I am interpreting this UCP article, the same way the person next to me or the second person who's checking the documents from the issuing bank side may not interpret it in that way. So that's why he might take a wrong decision in this. So to bring the uniformity, this ISBP 745 has been brought into picture. Okay. Okay. So got the objective of ISBP series. ISBP is 1. There are total 5. Okay. UCP 600, ISBP 745, URR 725, EUCP and ISP 98 for standby LCs. So these 5 documents form the base of any foreign exchange, means LC related transaction or foreign business. Okay, you must know each one. So now Before going, I told you that I'll be showing you how to join Adda 24/7 classes. Okay, go to Adda 24/7. Always I'll suggest you to go through the app. In the app, you get 1% extra. Okay, click on JAIIB and CAIIB. Click on JAIIB and CAIIB. Okay, click on CAIIB November. See this crash course. Join the crash course immediately. This one. Ebooks, test series, online live classes, expert faculties, interactive classes, recorded videos, limited size batches, everything you are getting. At what cost? Check the cost. Click on buy now. Put the code Y432. Never forget the code Y432. Click on apply. Okay, look at this. 77% discount you are getting. 77 plus 1% extra using the app. So go for it immediately. Even you can join the Mahapack. In Mahapack, if you see, you are getting 15 plus batches per subject. See this Mahapack. So join this also immediately. Okay. See this. Okay, join this. There are various validities available. 6 months, 12 months, 3 months. You can join anyone. Same, put the code Y432. Never forget the code. Okay. And join immediately because exams are just now.